are the top headlines from the startup space. The Enforcement Directorate issues a show-cause notice to Byju's and co-founder Byju Ravindran, as per sources, alleges forex rule violations to the tune of 9,000 crore rupees. The edtech giant says that the company has not received any such communication from the ED.
Microsoft CEO Satya Nadella says OpenAI's governance structure needs to change. OpenAI employees threaten to quit the company and join Microsoft unless board members resign. Reports suggest that some investors are exploring legal recourse against the OpenAI board.
The Ministry of Information Technology will meet social media companies to discuss the deepfake issue on November 23rd. Money control sources indicate that MeitY is expected to release a standard operating procedure on how social media platforms should deal with this issue.
Vendor digitization platform Bizongo acquires Factory Plus, a digitization app for MSME factories. Through this acquisition, Bizongo will offer local manufacturers to source raw materials from the best vendors at the lowest possible costs.
Fintech startup Scapia raises $23 million in a Series A funding round led by Elevation Capital and Three State Ventures. With the new capital, Scapia will continue to grow its customer base, add more banking partners and further strengthen its product suite.
Credit card fintech Kiwi gets $13 million in its pre-Series A funding round led by Omidyar Network India and plans to use the funds to expand its credit cards on UPI offerings.
The U.S. Justice Department is seeking more than $4 billion from Binance as part of a proposed resolution, Bloomberg reports. Negotiations include the possibility that the cryptocurrency exchange's founder will face criminal charges in the United States.
Those were the headlines that we're tracking for you this evening, but the top story tonight, the Enforcement Directorate has issued a notice to beleaguered edtech unicorn Byju's. Sources tell us that the ED has alleged that the startup has FEMA violations amounting to 9,000 crore rupees. Now, the notice extends to founder Byju Ravindran and parent firm Think and Learn Private Limited. Timsy Japuria joins in more with the details. Timsy, what are you picking up?
Well, as you rightly mentioned, sources have told CNBC-TV18 that Enforcement Directorate has issued show-cause notices to Byju's for alleged FEMA violations. These violations are to the tune of 9,000 crore rupees as per the allegations of the Enforcement Directorate. As we speak, ED has issued show-cause notices to Byju Ravindran, Think and Learn Private Limited over allegations that during the preliminary investigation, they were unable to produce documents of certain import and exports due to which they say that that actually gives the money trail of this 9,000 crore rupees, and that was something that they could not substantiate. Meanwhile, reacting to the story, Byju's spokesperson shared, and I quote, Byju's unequivocally denies media reports that it has not received any notices from Enforcement Directorate. The company has not received any such communication from the Enforcement Directorate, end of quote. Let's see what is in store for Byju's, because as we speak, we understand that once the show-cause notice is issued, it gives a date for these people to come and present their case in front of ED personally. So let's see, when is the questioning, how soon the details flesh out for this case from sources. We'll keep on sharing with you.
Absolutely right, Timsy. Many thanks for those details, but more trouble seems to be brewing there for Byju's. Ritu, it's over to you.
Well, here's the big global story that we're tracking for you today. Microsoft shares surged in trade to hit an all-time high after the tech giant roped in former OpenAI CEO Sam Altman to lead their artificial intelligence team. In an exclusive interview to CNBC, Microsoft CEO Satya Nadella said that the governance structure of OpenAI needs to change. He said that the Microsoft board would have a good dialogue with their board on that. Now remember, Microsoft is the largest investor in OpenAI. Sam Altman's shocking ouster from the company has rocked OpenAI's boat as well. More than 730 employees signed a letter threatening to quit and join Microsoft's AI vertical unless the board resigned. The letter highlighted that the process in which Altman was terminated undermined their mission. Interestingly, board member Ilya Sutskever, who is believed to have played a pivotal role in Sam Altman's ouster, is among the signatories. Reports also suggest that some OpenAI investors are exploring legal recourse against the company's board. Investors are reportedly concerned that they will lose hundreds of millions of dollars on the back of a potential employee exodus. CNBC's Wilco Loris has the latest.
Of course, the top news of the day is the fallout from everything that has been happening over the course of the weekend when it does come to OpenAI. There's so many moving parts. So much is still unknown. But what we do know right now is that there is the plan in place for Sam Altman and Greg Brockman to both join Microsoft, and perhaps with the CEO title to boot, to run their AI division. Now, we've had the open letters coming through from all of the OpenAI staff threatening to quit for the most part. There were some that are still on Thanksgiving breaks, according to some of the reporting. But you also, importantly, have a raft of offers coming via the way of Salesforce, coming via the way of NVIDIA, saying, hey, if Microsoft doesn't take you, if Microsoft offers you anything, we will match that. We will give you equity. We will give you cash to come and join our divisions, like the Einstein AI division over at Salesforce, like NVIDIA and everything that they are doing in the field of AI. But the problem is also mounting for OpenAI. There's been a raft of consternation about the process that the board did take in getting rid of Sam Altman, getting rid of Greg Brockman. You've got a raft of other investors, not just Microsoft, who we all know were a little bit angry about what happened, questioning the board. But the important part, I suppose, of all of this is whether or not Sam Altman and Greg Brockman want to go back, whether or not they are willing to accept some of the concessions, OpenAI that is, which would probably see that board having to be pushed aside. But moving forward, what we do know is that Microsoft is very excited about what comes next. And here's Satya Nadella telling you.
On Friday morning, John, I got up and I was very committed to our customers and confident in our technology roadmap, and really partnered with OpenAI and really partnered with Sam. And here, as we speak on Monday, I guess it is today, it's exactly the same place I am, which is I feel that we have all the technology and capability to keep innovating on the products you saw at our Ignite conference last week, up and down the stack from silicon to co-pilots, and committed to OpenAI and Sam. And that's, irrespective of what configuration, obviously we want Sam and Greg to have a fantastic home if they're not going to be in OpenAI and all the colleagues at Microsoft. But, I am exactly where I was on Friday morning.
Well, you're about the only one. So let me maybe ask it this way. How clear is it to you whether Sam is going back to OpenAI and whether the 700 employees there who seem to be loyal to him are staying at OpenAI or coming to Microsoft?
Look, I mean, that is for, OpenAI board and management and the employees to choose. I think at this point, for me, I just want, John, in this moment, right, what is it that I care about? I care about just making sure that we can continue to innovate. And as I said, I feel very, very confident. Quite frankly, Microsoft has all the capability to just do that on our own. But we chose to explicitly partner with OpenAI, and we want to continue to do so. And obviously that depends on the people and of OpenAI and staying there or coming to Microsoft. So I'm open to both options. But one thing I will not do is stop innovating. And so therefore, that's kind of what I will optimize on into making sure that we keep going forward on the roadmap we talked about, and there was so much excitement around.
You mentioned governance before. It seems to me that it's likely that you come out of this situation as Microsoft with more leverage in the OpenAI relationship one way or another than you had Friday morning, okay? Because your relationship with Sam Altman remains close, and it seems like Sam is either going back there with more control or coming to Microsoft, and that gives you an amount of leverage. Am I reading that wrong?
Yeah, look, John, I don't think of this as leverage. I mean, the reality, I think, is the world is recognizing how deeply partnered we were with OpenAI and Sam, and all of the dependency OpenAI has on Microsoft to do our world-class work around it, right? We do the kernel optimizations underneath. We do the infrastructure. We build tools around it. We build products around it. So I feel like, hey, look, we had a fantastic partnership on Friday, and we have a fantastic partnership today. And if things change in the OpenAI side in terms of who is there or who is not there, as I said, we will have a fantastic home for the people who want to continue to do the same work with the same mission at Microsoft.
Well, that's the latest that's happening in OpenAI and Microsoft. But back home, Bangalore-based travel fintech startup Scapia, founded by former Flipkart executive Anil Goteti, has secured $23 million as a part of its Series A funding. Now, the round was co-led by Elevation Capital and Binny Bansal's 3 state ventures. The round also saw participation from existing investors such as Matrix Partner India and Tanglin Venture Partners. Now, with this, Scapia's total funding stands at $32 million till date. And joining me now to discuss this further is Anil Goteti, the founder of Scapia. Anil, it's great to have you back on the show today. Today, you've raised $23 million. So talk to us about where the funds will go. Growth and expansion is on top of mind, right?
Yeah, thanks for having me here. First of all, it's a privilege to be here. And yeah, the money is going to go towards multiple things. One, obviously, is to get customer growth. We are scratching the surface. It's very, very early days. We've just launched 5 months ago. The customer love has been fantastic. We have distributed the card in more than 30 states and union territories, more than 7,500 PIN codes. We have a lot of work to do, though. So we are going to spread the love to millions of customers around the country. We need to take the product to many places. We obviously want to also innovate on the product. We want to continue developing new features. Our ethos is to actually develop product features very fast and roll them out continuously. If you look at a lot of our feedback around the internet, you'll see that we are rolling out new innovations every few weeks, and that's how we'll continue to do that. We're obviously investing in people. We want to bring in best of talent to be able to grow the company and put the best of product out there. So that's what the money is going to go towards. And we're very grateful to have new investors coming in who are, been in the industry for quite some time. Elevation, formerly known as Saif.
Absolutely.
Along with existing investors like Binny's 3 state ventures who were an investor before, but they're doubling down this time along with Matrix and Tanglin. So that's what the money is going to go towards. Yeah.
Okay, so you've got a plan laid out over there. But Anil, the last time we spoke, you had just come out of stealth mode. It's been about 5 months, like you pointed out, since then. You told us a little bit about what the response has been like. And tell us a little bit about why your card is better than any other travel card that's available in the market, or cards that give you points to book hotels or travel elsewhere.
Yeah. Look, our product has actually two big dimensions, right? One is obviously a lot of value. We give customers value on every transaction. We give 10% Scapia coins on every swipe or tap, which helps them convert that into flights and hotels within the app itself. We also give 20% back on every travel booking. We give unlimited lounge access when the customer spends a minimum amount of money every month. We also give zero forex transparently when the customer spends abroad. The currency shows up as and when the transaction is made real time. So it gives a lot of confidence to the customer. So we give a lot of value back to the customer. That's one big dimension. The other big dimension is obviously delightful experience, right? Whether it's real-time onboarding, we have customers who have onboarded within 10 minutes and they've written an email to me saying, I've never seen a product which has given me a card like this within 10 minutes. The physical product goes home after that, but that kind of real-time onboarding, paperless, completely digital, is something that customers these days look forward to. We have ability to see the transactions real time. We make it very easy for you to make the repayment. We help you control the card and secure the card in various types of situations, whether it's domestic, international, various types of, I would say, requirements that the customers have. So it's both these dimensions which make the product very unique, both the value that we give to all the customers and the delightful experience which we give from onboarding all the way to everyday use.
Sure.
If you talk about redemptions, which is instantaneous for us in our app with the Scapia coins, we have built a completely, I would say, full-fledged travel OTA inside our app with all global airlines, 5 lakh plus stays, so the customers can instantaneously convert those coins into flights and hotel bookings.
Sure.
This whole package is what makes it unique and I would say differentiated for the customer. It's delightful, it's enjoyable. They love it when they get it, they love it when they use it, they love it when they refer their friends and bring them on to the Scapia tribe. Yeah.
All right. If you could quickly tell us, what's the monetization plan? How are you making money right now? Give us some targets that you set for yourself for the next 1 to 2 years.
Yeah, look, I mean, our targets are not just for 1 to 2 years, right? We look at in the next 5, 10 years, we're building a long, sustainable financial services firm, and we want to get millions of customers into our fold. We are, quite excited by the traction and how we are seeing the growth. And we're looking forward to bringing a lot of folks, into the company. Yeah.
Absolutely. So your target, as you pointed out, was you want to have 1 million customers. Where are you on that journey right now? How many customers do you have? And also, what are the new products that you've launched within the product suite at this point?
Yeah, look, we have been launching quite a few things along with our card. Inside the card, being able to convert them to EMI is something that's coming in the next week or so. We have made it very easy for the customer to be able to use the card every single time. Being able to see, sometimes people forget, for example, if they've entered a wrong CVV and they don't realize that they've actually entered the wrong number. They don't get to know why the transaction has actually failed. Simple things like this actually make a lot of, I would say, differences. On the travel side, for example, we've been adding a lot of new features of, seat, meal, baggage, booking. You don't get these typically when you have redemption platforms, right? Now we're going to, in the next month, launch Travel Now, Pay Later for the customer to be able to avail no-cost EMI when they are actually booking travel on our platform. So I think we're just getting started. It's been very early in our journey. It's been 5 months. We have a lot of exciting new features coming up. We obviously announce every single feature that's coming up on our social media, and we'll keep doing that over the coming months and years. Yeah.
Oh, all right, Anil, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best going forward in this new journey of yours.
Thanks for having me. Thank you so much.
Well, we have to take a short break on that note, but up next, credit card fintech platform Kiwi has raised $13 million in a Series A funding round. How will it use these proceeds and more? We'll catch up with the founder on the other side of this break. Stay tuned.
Welcome back. You're still with us on Startup Street. Another top story coming in right now. In an attempt to tackle the deepfakes issue on social media platforms, the Ministry of Electronics and Information Technology will meet social media companies on the 23rd of November. According to sources from Money Control, in the meeting, which will be chaired by IT Minister Ashwini Vaishnav, the government would release a standard operating procedure on how social media platforms should deal with this issue. Remember, the ministry had sent an advisory to social media companies urging them to take action on AI-generated content. In this advisory, the government had warned that not removing deepfake content could attract damages such as losing the safe harbor provision. But with that, Ritu, you've got more interesting news on the fundraising front.
That's right. We have credit card fintech platform Kiwi, which has raised $13 million in its Series A funding round led by Omidyar Network. Now, this funding, the company says, will help it expand its credit card on UPI offering in India. Joining me now to talk about this and more on the company is Kiwi's co-founder, Mohit Bedi. Mohit, thanks very much for joining us here. Let's start with that $13 million funding coming close on the heels of your last $6 million funding. How are you going to deploy this? Because you have 25,000 credit cards so far. What is the target as far as the next year is concerned? How are you looking to expand your offering?
So good to be back on the same platform. It's been 6 months, you're right. So we've raised these funds, and as you were mentioning clearly, that we've had a product market fit for the product. We did a certain number of cards, and now we're looking at expanding, and obviously, because this is the time to expand our whole business. So we're looking at close to 500,000 or more in the next 12 months. That's the plan right now. And we want to try and leverage and go into deeper markets in India. So tier 2, tier 3 will be our focus, and which is why Omidyar also put their faith in us and invested.
Well, Mohit, I'll come back to that 500,000 number. But just to be clear first, so far, Axis Bank is your only partner to offer credit cards. What are the other banks that you're in talks with?
So right now, yes, we've launched with Axis. As I told you, we wanted to do a product market fit. We are in talks with 5, 6, but in the next 6 months, or at least 2 of them get closed out. So these all these banks that we are referring to are good, largish banks, and you'll see you'll hear some news in 3 months.
Well, I ask about the banks because this funding is coming at an interesting time because, just last week you had RBI putting some sort of guardrails on unsecured lending through credit cards as well. What have conversations with banks been like? Because the feedback we've been hearing is this business may get a bit slow in the near term until banks are able to reassess the capital buffers.
So the key word that I mentioned here was large banks. As you know, the unsecured lending, at least in the large banks, has been. I think the guidelines were directed around NBFCs and small institutions who were probably doing small ticket loan and trading the fine line between good and bad customer, probably. And they were trying to leverage and get those customers inside. But whichever banks we are talking to are, as I said, large private sector and public sector banks. And the lending there, including unsecured, has been very. For example, if you see Axis key indicators, as far as unsecured lending is concerned, they've been the best, right, in terms of share of unsecured lending. What will happen in the near future is there will be increase in cost of capital, but that I think is accounted for in the P&L, right?
Yeah. Well, Mohit, you're also a former Axis Bank employee. I guess you've got that straight from there. But Mohit, you said 500,000 customers is what you're hoping to add in the next 6 months. I think the last time we spoke to your other co-founder, they indicated that 1 million customers will be onboarded in the first 18 months of the company. You've crossed about a year. And you also want to be the leading issuer of RuPay credit cards by 2026. Are you on track to do that, those numbers?
So we are on track to do that, which is why, as I said, we need a couple of more large banks to build that ambition. In terms of number of customers and largest RuPay card issuers, we are clearly, that ambition hasn't changed at all. We want to be one of the largest issuers of RuPay card, and thanks to some tremendous support from NPCI, we are on track to do that. And nobody at least with that much confidence, we can say that the credit on UPI ecosystem, as far as acquiring, issuing, acceptance is concerned, we are really the pioneers in that.
That's right. And for our viewers, Kiwi, of course, is a NPCI licensed UPI third-party app. But, before we let you go, Mohit, it's early days, I know. But if you could give us a sense of the revenue potential in the coming year and how it's been thus far, since you started in November 2022.
Yes, so the going has been good. The revenues have started kicking in terms of that much amount of income has started kicking in. So credit card as a business has a J curve, which means you make losses for first 18 to 24 months, and then you start making profitable business after 24 months. You have a break even and payback that happens during the course. So it's a good longish business that you need to be patient and stay invested in. So we've completed those first 6 months at least of the cycle as far as cards business is concerned. And we are on track to at least break even in 18 to 24 months. And it is a hockey stick there after that. So it is all a function of how much we book, how the business grows. And this round of investment is exactly for that, for helping us grow our business in terms of getting people, technology, getting our growth plans in place. So that's what we are using these funds for.
Okay, you're going to break even in 18 to 24 months. But, in terms of people as well, how large is your team? And, now that you've got this funding on top of your previous one, are you looking to significantly expand your team?
So not that much. We are very prudent. Right now, you won't believe it, but we have close to 35 to 40 people only on board. Out of that, 70% of our team is engineers, and they have built the technology. So right now, obviously, now that we've got those funds, we'll try and do some hiring on the product. Senior management, good people hiring on the product and partnership side. So that's the plan right now. But we've just got 35 to 40 people. And more, as I said, 70% of them are engineering people who are actually day on building the whole product for us.
I see, Mohit. Thanks very much for taking us through the fine print of, what the company is doing, where it's at, and how you plan to utilize that $13 million that you raised from your investors. Mohit, thanks very much. It was a pleasure speaking with you.
Yeah, thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.